does that start to cramp the style of the stock market, do you think?
3 could be seen, Bill, as in this worry about deflation world, it could attract money to go back into bonds and away from stocks. That having been said, 3 is still not an indicator of great, robust economic health. You want to see that thing gradually move up towards 3.5, which is the consensus estimate year end, 3.5, 375. If it's done for healthy reasons, it will be a very good thing. You'll be able to walk out of the hospital without the aid of a cane or a walker or a wheelchair.
Right. We were talking during the break, we got retail sales coming up next week. That's another sector very much in focus right now, and those numbers may not be great because of the weather again, right?
It was negative 0.4% last month. This month, the consensus is only for 0.2. You want to watch the internet and online retail sales,
yes,
which you saw were down 0.6% during the holidays. That is really because you see these big chains shutting down stores. You've talked about it, and it's going on to online. Watch the online sales.
You got it. David, thank you.
Thank you, Bill.
Have a good weekend. Nice tie as always. And we're going out with a little minor rally here for the Dow. That's interesting. And the S&P, look at that. If we finish positive, and it looks like we will, that will be a new all-time high for the finish out on the week. Stay tuned now. Hour 2 of the closing bell with Kelly Evans and company. Have a good weekend, Kelly.
Thank you, Bill, and welcome to the closing bell on this Friday. To close out the week, I'm Kelly Evans, and the S&P 500, we're going to have to watch it, but it does look like in the final moments of the trading session today, it's turned positive, which would mean that the S&P closing at another record high as we mark the 5-year anniversary of the lows here in March 2009. Here's a look at how we're finishing the day and the first week of March, by the way, on Wall Street. About a 29-point gain on the Dow, 16,450 is the level there. The NASDAQ clearly closing lower today. We'll get into that in just a second. It's off 0.4%, 16 points, and the S&P 500, watching this for a couple of interesting reasons. It does look like it closed higher by about a point to 1877. Let's get right to it with today's panel. Joining me now, private investor, he's a former banker too, Evan Newmark, our very own Morgan Brennan, Lawrence Delavane, and Robert Frank. It's great to have you all here. Lawrence, you're your first time, and I just want to know, as we talk about the kinds of activity, whether people are worried going into the weekend about Ukraine and everything, from the hedge fund guys you talk to, what sense are you getting?
So everyone in New York seems happy. They're literally just applauding. But Ukraine is not over. A hedge fund move I saw recently was buying tail risk protection, meaning that if there's actual conflict, it could mean a big drop in the equity markets, and so they want to protect against that.
Wait, but are you really saying they're